So how can I save money on my mortgage? That's something that doesn't sound possible, right? If you already have a mortgage, or if you're thinking about getting a mortgage, you've been told this is going to be your mortgage payment for the 30 years or the 15 or the 20 years of your loan. So if you're trying to change that payment, is it possible to do it? And if it is, how can it be done? Well, that's a challenging subject, and I'm going to give you 3 different points today that you may not have considered on how you might actually be able to save money on your mortgage. They won't apply to everybody, and they won't universally apply, so it's not like you do all 3 or you won't do any of them. So listen to these 3 points, and then if you have questions about them, later on you can call Weber Mortgage and talk through the specifics with us. The number 1 way you can save money on your mortgage, and this is physically and financially accurate, you can use a bi-weekly mortgage payment. Now, the math on this is pretty simple. If you have a 30-year loan and you make 1 payment each month, you're gonna make 12 payments a year. You do the math, okay? But if you talk to your loan servicer and you decide to do a bi-weekly payment, instead of making 1 payment a month, you make a payment, half a payment every 2 weeks. By doing that, you're actually making an extra mortgage payment during the course of a year. And when you're making your normal customary mortgage payment, you'll find that a large percentage of that money is going towards interest, and then a little bit is going towards principal. And the deeper you get into your loan, the more is going towards interest and the less is going towards principal. But when you make that extra payment, you're actually applying that directly towards the principal. So that money, let's say it's $1,000, you'll avoid 29 years of interest on that $1,000. And by doing this bi-weekly payment, you're actually probably going to cut 6 to 7 years off your loan. So it is a substantial savings on a 30-year mortgage. Now, do I just recommend that you start writing half a mortgage payment and mail a check every 2 weeks? I do not. First of all, your mortgage servicer isn't going to know what you're doing. Some mortgage servicers don't accept partial payments, and so they may not accept the half a payment you made. What I will tell you is almost every loan servicer out there has the ability to accept bi-weekly payments. And if you notify them that this is what you want to do, they will have a process set up where you can go about making half a payment every 2 weeks. So that's the bi-weekly mortgage payment. It's very advantageous to you. And of course, you are making an extra mortgage payment a year. So you could just wait till the end of the year and write an extra mortgage payment of principal and interest to your loan servicer and send them a letter and say, apply this directly towards principal. And that would save you that interest for the remaining 29 years. But if you do it as a bi-weekly payment, some of that interest is actually going to be saved earlier because every quarter you're essentially accelerating that mortgage. So number 1 way to save money on your mortgage is by doing a bi-weekly mortgage payment. Number 2, and this will apply to you if you put less than 20% down when you purchased your home, getting rid of PMI. PMI is private mortgage insurance. It's basically an insurance plan that just guarantees that the lender will get some of their money back if you default on your mortgage. I don't know if it was explained to you when you got your mortgage, but the bottom line is if you didn't have 20% to put down in the good old days, then you couldn't borrow a house. Well, now you don't need 20% down. You can get by with as little as 3%, or in some programs, 0%. Most loan programs have PMI attached with them if you put less than 20% down. But some of them, you can have that PMI dropped early through A, making your normal payments. Remember, I just told you most of that payment is not going towards the principal, so you're not going to pay it down very fast early in the loan. But B, you can actually get credit for the extra value that your house has gone up while you've owned it. So if it might take you 7 years for your payments to pay your 20% equity for you, it may only take 3 years for the payments and the equity going up as your house appreciates. The only way to know the answer to this is to call your loan servicer and ask them what their process is for getting rid of PMI. Now, I'm going to recommend a step before you do that. I'm going to suggest that you call Weber Mortgage or you call your real estate agent and ask the estimated new value of your house, because your realtor can help by giving you a competitive market analysis, or Weber Mortgage can help by looking at some automated valuation models that can give you an idea if the $250,000 house that you paid for 3 years ago is now worth $270,000 or $300,000. You'll want to know that because you need to have 20% equity in order to get that PMI dropped. Then you'll contact your loan servicer and you'll ask them what their process is for removing PMI. Most of them are going to require you to pay for an appraisal that they'll order, and it will come back and say what the new value of the house is. They'll compare what you owe with the new value of the house, and if you now have 20% equity, then they will remove that PMI from your mortgage payment. Don't just assume you're going to have to make that mortgage payment forever with the PMI on it. And by the way, don't just assume that the loan servicer is going to remember to drop that PMI when you get it to the spot at which you've earned 20%. They should, the law requires them to, but mistakes do happen and you should call and check on them. The third way that you can potentially save money on your mortgage payment, and this is not going to apply to many people, is making sure your homestead exemption is in place. If you purchased your home and you didn't go to the courthouse, or the closing attorney didn't tell you they were handling this for you, then there's a chance your taxes are higher than they need to be. To explain this, we tax property at a certain value. But in Alabama, if you own a property and you live in that property as your primary residence, they essentially cut that tax value in half. Your taxes themselves will be half of what they would be if you own that property as a rental property or a commercial building or something like that. If you didn't tell the government that you were going to live there, your taxes might actually be higher. Well, how could they be higher, Michael? There's a couple things that could happen. Number one, the previous owner might not have had a homestead exemption. And if they didn't have a homestead exemption in place and you didn't file a homestead exemption, then you're still paying the normal tax rate, which some people call double what the homestead rate is. If the previous owner did have it homesteaded, but you failed to homestead, then the county at some point would realize that that homeowner had moved and they will revert those taxes back to the non-homestead rate. So while you may have been at the homestead rate when you first purchased the house, you could get kicked out of that rate if you don't go tell the county that you're going to live there. Now, if we ever get a call from a client saying, hey, my mortgage payment just went way up, it's typically because they failed to file their homestead exemption. It's a very simple process to do, so if you're not sure, call Weber Mortgage and we'll walk you through how to check the tax records to see if your homestead exemption is in place. And if it's not, we can coach you how to go file it. But essentially, all you do is go to the tax assessor's office in your county and take your deed with you and your ID and tell them you reside in this property. Take your settlement statement or utility bill and tell them you live there and that you own the property, and they should implement that 50% tax cut. So that's 3 different ways that you could potentially lower your mortgage payment. Number one, biweekly payments aren't actually going to lower your payment, but they will lower what you pay over the life of the loan. Number 2, you can find out if you have PMI, and if you do, when you can get rid of it. And number 3, you can make sure you are receiving the tax exemption that you should be receiving. By the way, on that tax exemption, if you're over a certain age, you may be completely exempt from real estate taxes. So you need to talk to the tax assessor about that as well. If you have questions about any of these subjects or anything else mortgage related, Weber Mortgage would consider it an honor to help you with your issues.